All right. Good morning. Good morning, everybody. So as you can see, green on the screen, global indexes around the world are up, except for Hong Kong, which came out with their CPI, PPI data last night, and they're slipping more and more. So they're really having a hard time over there. We have our own CPI and PPI this week starting Thursday. So we're going to have to see how that plays out. So far this morning, putting them in order, you can see that the US is just starting to come up off of the bottom. A little bit of work left to do still. But so far, not too bad. The main thing on deck today is going to be those additional auctions. Since everything is front and center in focus with bonds and yields, and that's not just here in the US, that's around the world. Hey there, grumpy kitty. So you can see there's really nothing highlighting as drastic or extreme. Everything's this light color. Japan's going to be in focus in the overnight hours. And then for us tomorrow, we've got our PPI, or excuse me, our CPI. And then Friday's PPI. It is Wednesday, so we have the EIA crude oil inventories at 10:30. You often have an opportunity to do at least a little scalp on USO at 10:30. So, you know, if you're looking for a little bit of an intraday play, that's not a bad way to go. We do have additional auctions today, the 10-year note at 1 o'clock. Tomorrow we have some big ones, right? We have the 30-year bond and a whole lot of front auctions, 4-week, 6-month, 3-month. But the 30-year, yeah, that's a big dog. So volume is relatively light this morning considering where it was yesterday, or even just how it has been through the week this week. This really shouldn't be too concerning on the face of it. The main thing is to understand if there was, say, a little lower into the 75 and below that, we would want to start looking around and see what's going on. Why is it so low? And what is the expectations, right? Just like if it's too high. And normally it lines up, right? We go and look and we find there's an economic data point when it's too low or too high, or there's a nation that's closed for the day, you know, banking holiday, something like that, national holiday, and that usually accounts for it. We're still not inside day breakout. We had a lot of work to do, right? We kind of still within this range. It is interesting to note, however, if you use the LINREG line, the regression line, and just it matters, you know, at what day you started at. You don't have to really put your mouse right on the candles. So I could be all the way down here if that's where I start the line. That is a very clear indication of what's been going on over the last, you know, week and a half or so, right? There's not a lot of doubt or ambiguity in any of that. The thing is, if we start to base and turn around and maybe begin going back up, this line would take a long time to change, right? It's like least squared method, the mean, the average. It takes time to turn around and begin going the other way. I know there's been a lot of talk out there about, you know, we're going down. It's the start of a whole new retracement into the lows. We're barely down at all, right? From 4,600 to 4,480. We're still holding above the 10-period moving average. until that changes at the very least, there's no going all bared up and trying to short this market into oblivion. We need a pullback. It's healthy to have a pullback. And there's been no real change to anything. Ten-day, 30-minute volume profile. When we're at the high, we expect to go to the lows. When we're at the lows, we expect to go to the highs. We do have a little bit of a B shape, classic B. And as we talked about yesterday, if we were to run up into this 45-30 area, that we would get tangled up into all this trash. Now, if we can push through it, we can get up into the 4,600 relatively easy. One, that's where the point of control is. And two, it's just this shallow area that we should be able to move through pretty quick. And there's still a gap that needs to be closed. Now, you might notice that on the right side, this blue profile now has the point of control basically where we're at now. Well, the profile in blue is actually a TPO. It's not a volume profile. Volume profile is volume by price, and a TPO is volume by time. TPO stands for time, price, opportunity, TPO. So if you were to go and look for that on Thinkorswim, that's what you would want to type in is TPO profile right there. Sure, it looks really similar to a volume profile, but it's just a little bit different. So now in this 10-day period, we can see that we've spent more time at our current location than we have at any other spot in this 10-day period, but there's still more volume overhead way up here than there is at our current location. And that's all that we can get out of this at the moment. We want to see when that changes. Yesterday, I mentioned that we're going to see this point of control come down here in the next day or two if we continue to linger and languish around this zone. We have a new VPOC developed yesterday near these lows. And this is one of the good things about using a volume profile, right? One, how much time did we spend at these lows yesterday versus all of this volume that we have at those lows from yesterday? We hit a floor. They came in and defended this level with vigor, right? With conviction, and spun this thing around and ran it back in the other direction. I got a really good entry yesterday, right at 11 o'clock, 11:02 in the SPX for a run up off of that low. You don't catch the bottom every time, but sure is fun when you do. Hey, I'll take it, right? So right now we still have that VPOC overhead, 45.44 basically. And that puts one on each side of us. Not really a big deal. Just keep in mind, these aren't support and resistance or anything like that. They're areas of interest. Here we're looking at the 10-week. We're still more than 1.25% above the 10-week, closer to 1.5. You could consider that the wave is now working its way back up. It's not a very clean wave, but there is a wave in here, right? And with that in mind, we were in a downward move through that wave, and now we're starting to go back up again, just like here and here. Either way, 1.4% away from the 10-week is not overbought. We have not moved too far too fast, and it doesn't owe us anything, right? And that should be pretty obvious just looking here on the daily, that we haven't gone anywhere, we haven't done anything, and we're not overbought or oversold or overstretched or anything like that. We're still nicely nestled, really comfortably into this weekly range. And if you think about where we closed on Friday and how high we went on Monday, we haven't done anything all week. Now, the argument could be made that they're waiting on CPI, and I wouldn't necessarily disagree with that. CPI is going to be a little bit of a deal. The Fed needs cover to do certain things, right? Or they don't need, I guess that's not a good word. They don't need it, but they like it, right? They like being able to point to something and say, well, because of this data here, we're going to, whatever, raise rates. So we want to see what that data is going to look like. So far, we've had a nice turnaround and run back up. Thinkorswim has been closing my grids lately. Starting to get a little annoying. That's why we save them. Can you imagine having to rebuild that every time? That would be really annoying. So the dollar's off that high, staying below that 103 and continuing to fade back. Notice that it's not an extreme straight drop, right? And that's kind of what we need. We don't need it to be like this back here on last Friday where it was just falling like a brick in water. We need it to go down. True, yes, needs to be a nice calm descent. Nothing crazy, nothing wild, no fast moves. Bonds, I would have liked to have seen this get a little higher up, but so far the turnaround from last week, Thursday into Friday, is holding, but it's got a lot of work to do, right? They really need to get those bonds up off of those lows. And at this point, it's still underneath the critical level. So it has a lot of work to do. It's a little soft, little squishy this morning. Hoping to see that turn around. That's a classic double bottom bear trap, by the way. So should squeeze them nicely and push us. Maybe we can get up into the 123 area. And the 10-year, consistent, persistent move to the downside after that Friday peak. Again, we don't want to see wild, crazy moves, just nice and easy. Notice the disconnect between the dollar yesterday and the 10-year. Now, it's not like they're running lockstep perfectly in sync, but they've been working together for quite a while. And yesterday, it really stood out how we had the dollar make that overnight move hard and fast to the upside, while the 10-year just kept on trucking to the downside. All right, so things are a changing. And, we really want to keep your eye on these two products exclusively, but also US dollar China. Now that they've had their CPI and their PPI and they're getting graded, we can see a little bit of that weakness. I don't think they're done yet either. Between this and US dollar Japan, Japan now has the greatest unknown left. Most of the other markets have either already reported or have clearly stated their intentions. So that honestly just leaves Japan as the big unknown. The China ADRs, for some reason that label isn't loading. The China ADRs are up this morning about 1.25%. They're leading the way with the EVs behind it at about 0.5%. And that's not looking really exciting, to 0.5% is not overly enthusiastic, but I mean, it's a good start. And then pot stocks are down the worst, or at least that's the list. I bet it's just one name, just like yesterday. Let's take a look in there and see what's going on. So Tilray down a little bit. Yeah, I mean, they're getting a little weakness, but it's not that bad. They had a nice pop first. Uh-oh. Come on, Thinkorswim. You can do it. There it goes. All right. Up the most, Nat Gas. Behind that, KWeb and the China constituents. And then energy, more emerging markets, which is basically just China again. And then we get below my benchmark of 0.5%. To the negative side, we got really nothing. Bitcoin by 0.25%, but that's not enough to even hit the benchmark. So really nothing on the downside. Give me just a minute. I need to put a bracket order on this thing. That way, if I happen to not pay attention to what's going on, I'm still good. All right. So we're looking at BABA here, nice gap up. Got to be a little mindful on this gap up, kind of like this gap here. It didn't do it much good and down it went. You know, things don't just move in a straight line to the downside. And a lot of times in the pre-market, they'll talk things up and then it'll fade back down. And then, you know, in the next day's pre-market, they'll talk things up and it'll go down. That way, you know, they get a little bit of an up move. And it's not just one straight shot down. Right? It kind of makes sense there. So we don't know that that's what's on the agenda today, but looking at the weekly on BABA, we're down pretty significantly. Got a lot of work to do here. Just getting back into 96.5 wouldn't be enough. In fact, we can mark out the midpoint. Let's do last week's. That would make more sense. 50% of last week's range is 98.5. That's going to be our line in the sand. Here on the intraday, we can see it way up here. And we're still sitting way down here at 78.6. And everything is still inside this really big candle. Now, when we move it like that, the 50% mark is basically right where we're at, 96.28 this morning. And that's a pretty good gap up considering where we closed yesterday. We closed down here. And now in the overnight hours, we've run up from there, from 94.22 to 96.22, basically. A nice $2 move. Can it keep it, though? And that's just BABA. Got Baidu kind of making the same moves, just not that big gap. PDD, same gap, big move. Let's just take this measurement, put it on the large candle. We can see the 50% mark. In fact, that's what it bounced off of yesterday. And now the continued push, we're at 85.26 this morning. So it's doing pretty good. Not a bad move up. So these China ADRs are getting the most flow. JD. Another one, maybe not looking quite as good as the others. Not even a maybe, right? It's just not looking as good as the others. I do like that 10-20 cross though on the weekly. If I was looking for a reason to perhaps take this in a swing trade, that would be a good start. But on the weekly, it's got some work to do, right? Getting above that 40.76 would be a good start. And even if you do get that crossover, you're still underneath the 50 and the 200 week. That 50 week's going to be a challenge, right? Getting above $45. Why did I? Either way, the 50% mark that we're looking for is still overhead here. 38.44 needs to get through that and get above it. Otherwise, we're still in a bearish situation. Bigger picture in JD. Doesn't mean you couldn't get a day trade, right? Really nice open interest. You're looking at, 25,000, 15,000, 13,000. That's not bad. 2 pennies in the slippage, a little bit difference between the bid and the ask. These are really decent options in JD. Take a look at BABA, 40,000, another 40, 36. The slippage isn't all that bad. A little wide near the money, but it's after hours and the price hasn't normalized, right? So it can be a little off until we get back into the open, but look farther out, these 2 penny, 3 pennies, nice tight range. So BABA, Baidu, maybe these options aren't that bad. Now, okay, Baidu so far is the worst of the bunch, but even being the worst of the bunch, there's still thousands in here. Yeah, okay, Baidu's the worst. So if you're looking for some day trades or a short duration trade, I'd probably leave Baidu alone. If you're going to get into like a swing trade, it's not going to be that bad. You can kind of deal with the slippage a little better. But for a day trade or even just for the week, say next Friday, I wouldn't mess with Baidu's options. Neo, XPEV, all the EVs were the next name on the list or the next group that was doing good this morning. Not up even half as much as those China ADRs, but still up relatively well, 0.5%. Neo's not looking all that great at, just to kind of put it into context, that's not impressive. Maybe XPEV will look a little, no, that doesn't look good at all. Okay, a little bit of a bump in Nikola, but we're getting into penny stock junk at this point. You got Rivian after earnings, which I thought this thing was going to do a lot worse than that. Gotta say, it survived much better than I had anticipated. I had bought some really cheap puts. I had 2 penny puts. And now that that didn't work and I own some puts, probably going to sell some puts on this. Make a little bit of money at least. We'll see how it plays out through the morning, but notice after earnings that this isn't a runaway freight train like we've seen in a lot of the other names. Say like Amazon after earnings. Two ways to look at it, that it hasn't yet made the move and gives us the opportunity to perhaps participate in that move, or two, that there isn't going to be one, and it's going to do the opposite of whatever the earnings was. So if the earnings weren't that bad, and I can't tell you if they were bad or not, I haven't gone through the material yet. But if the earnings were bad, and the opposite would be that this goes up anyways, or the earnings were good, and the opposite would be that this goes down anyways. On a weekly, we do have the 10-20 cross, and we do have this really big scoop pattern forming. You know, a little bit of a cup and handle, but again, it's got a lot of work to do before we get to that point. All right, we can see the FANG names this morning. They are up, just not up by very much. Google, Apple, Amazon, Microsoft, Tesla, AMD, Snow. Microsoft on the weekly chart made contact with that 20-period moving average. I mean, it didn't come down and actually hit it, but you know, relatively speaking, that's a bounce. Now it needs to follow through, but this is a weekly TRB setup, and that can complete the entire move in a single week. All right, that's what TRB is that's what makes it so good. So if it was an hourly, we could expect it to be done in an hour. If we were on a daily, we could expect it done in a day. We're on a weekly, we can expect it to be done in a week. One single week, right? One single entire week, just taking it out, and it would look like one of these candles. So it hasn't triggered yet. Just like anything else, there's rules, you know, and some additional pieces of information that kind of help us out from time to time. One of them is going to be that this needs to get out of the base. So if we consider that lowest candle, and we look for something like a CAHOLD, CAHOLD, you're looking for a breakover above this candle, 331.11. Since we are looking at a weekly, you wouldn't want a weekly close above per se, because that breakout candle is very likely going to be the candle, and it'll be the entire run in a single shot. That's what makes the TRB so good, right? So we need at least a daily close above that to trigger the entry for the TRB and then the run up. A couple of ways you could play it. You could just buy calls at the target somewhere around 365. You could run a put credit spread at the money, collecting about 50 cents or 50% of the width of the spread. So $5 spread, get about $2.50 credit. You could buy in the money calls somewhere around 325, whatever suits your fancy, right? Now, Apple really did make contact with the 20, as opposed to Microsoft, which just got near it and kind of gave it the nudge, the nod. This actually did it. So now it's above it. It needs to keep it. We're at 181 this morning, so we're halfway back up through this weekly candle. But I mean, there's just so much work to do. And this isn't a TRB either, right? That big breakdown bar that we have here, that's not a TRB. That's just straight falling. So we could reciprocate, sure. We've got examples of that in the past, you know. Still needs to prove itself. So a really good start to all of that would be getting above 182. That would at least get us back inside the box. And the warning is going to be that 10-week moving average or 50% of last candle, right? That 189.33. That's going to be the biggest warning area. Now here on the daily, we do have a TRB setup. It's a really wide, kind of sloppy TRB. And looking at yesterday's reversal candle, you can see all those buyers down here underneath 179. It just gets bought right back up again, right? Happened on Monday, happened on Tuesday. So there's a lot of interested parties down here buying it up, considering it, as a sale. But you're looking at Apple underneath the 50-period daily moving average with a 10-20 cross to the downside and this big, massive gap down. None of that is good, right? Like there's nothing healthy or positive about that at all. So a lot of work that needs to be done for this to kind of turn back around. There is the argument, though, if they're not willing to own this, they're not willing to own anything. Why would you want to own anything else if you're not willing to own Apple, right? So not a surprise to see it getting bid up. If you do want to try to take Apple long, whether you're doing it in stock or shares or a combination of, it really needs to hold that 178 at this point. Now, Amazon's had this really nice bull pennant, but at some point it needs to do the thing, right? So it's either going to break down and be done, and that'd be a really nice bull flag fail, or it needs to get in gearing and get to going. Here on the daily, we really have an island at this point. When you close down here and open up here, we got this really big gap. It's considered an island, but it's not an island reversal until it gaps back down again and we are back down here. And it doesn't owe us that, right? There's plenty of markets that gap up like this and keep that gap for years. So until it gaps back down, it's not an island reversal, it's just an island. And from that island, it can build its base here and continue to go up. So if you're looking to take Amazon higher, you really don't want it to get below the most current low that it has in this island. I like round numbers, so 139 would fit. Even 138 would be fine, right? We could wick just a little bit more. But look at those wicks, by the way. Kind of implying that the buyers were very happy to pay that price and take it right back up. So there's a lot of defense at that 139. It needs to continue to be there. We are still extended quite a bit from the 10-week in Amazon, but it can handle it. And it's been much farther away from the 10 than that, and it's been just fine. It's not like the indexes. All right, NVIDIA is a mess, right? It's been a month where we've just been riding sideways and there's no end in sight for that at all. We're IX10 underneath this really nasty candle from all the way back in the early part of July. Needs to get out of that box. And sure, the box is smaller if we discount that one and start looking at some of these other boxes. It's been getting more and more narrow, which means more and more compression, which means when this thing finally gets out of the box, it's gonna make a move. Now, there's no direction implied in that, right? If you blow up a pressure cooker, for an example, there's no particular direction to that madness. It just blows up. So you want to kind of look at other things. The consistent, persistent trend, what's going on in the options market, how it's reported, right? Earnings coming up, anything like that that can kind of give a little bit of direction. If you're looking for a continuation in NVIDIA, it really needs to keep that 10-week. Just to see where that 10-week has been and how we've been riding above it. This is good, clean, healthy, and it's been a nice pause. We've needed all of that. But the pause is just about done, and I would keep a close eye on NVIDIA. Even if you wanted to do like a strangle or a straddle, right? Buy a call, buy a put. I'm not a big fan of doing that, but you know, in a situation like this, it's going to go one way or the other. And it's not very likely to be a small move. To kind of get an idea of where it might go, you can start looking at other semiconductors. SMH looks really similar, which it should. It's not much of a surprise there. TSM is already underneath that 10-week. Intel made contact with the 10, holding above it, but that's not saying very much. We've been above and below this thing so much that it has no respect for it whatsoever. But we do have this really great Wyckoff distribution and basing now into an accumulation pattern. If I put more weeks on and zoomed out, it would have that really nice, really big scoop pattern. So it is working its way back up on the other side. And AMD has been through that 10 so many times, there's no respect left there for it whatsoever. The fact that we're above it or below it at this point doesn't even hold any value or weight. But IX10, we've been in this range now longer than in the one in NVIDIA. And while it's not tightening up like NVIDIA's is, it's still a really tight range, and it's got to come out of there sooner or later, right? With the phrase I like to use, can't stay here. It's going to go somewhere. And the longer we stay sideways like that, the bigger the move is likely to become. You could run an inverse iron condor, right? Everybody sells an iron to open. So if you think about an inverse version, it'd be buying to open an iron condor. I don't like it. The risk on those aren't really that great. But if the if the volatility is low enough, there is a precedent for it, right? There is a strategy. It's called a gamma iron, although it really doesn't have anything to do with gamma. But yeah, you could buy an iron condor, and instead of staying in the box, it's just like with the strangle or the straddle, you need price to get out of the box. I just don't like the risk on those. If you do run it though, your profit, keep it small, right? Aim for like 35, 40% profit and then GTFO. You don't try to run those to their max. Tesla's playing around with that 10 period this week. If this is the bounce, if it's the reset that we've been kind of looking for on this move up, then just like with Apple and Microsoft, it needs to do it. Right? It really needs to do it. So the 10-week is very often very close to a 50-day. They're not perfect, but kind of when you're on a daily and you have a 50, you can just imagine that that's the 10-week. Or if you're on a 10-week, you can just imagine it's a 50-day. It's going to be kind of close. So this needs to do the thing this week. By the end of the week, this needs to be resolved. into the open of next week. And how we open next week after CPI this week is going to be really important. This is a TRB setup on Tesla, by the way, TRB weekly, which means we could get to 280, 290 in a single week, one shot. All we have to do is first get above that 253. And then it's game on, right? Because that's the basing candle at this point, even though one candle isn't a base, right? Just to be clear, you don't have a base with one candle. We just, yeah. So break out of that box, that triggers the TRB setup, and it can make the entire run in a single week. It won't always do it in a single candle. If it was an hourly, it'd be done in an hour. If it was a day, it'd be done in a day. It doesn't always happen in a single day, but that's why the strategy is so good, because most of the time it is done in a single day or a week or, single candle. The financials are moving around pretty good this morning. Here's Bank of America. So it's getting a little bit of attention. Tried really hard to get that turnaround. Now it just needs to follow through. Well, that little push up didn't last very long, huh? All right, so if Bank of America is doing it, then its cousins probably are too. Wells Fargo, JP Morgan. I would be more interested in if they can't hold up, right? And it's part of the reflation trades. So XME, XLF, XLE, they ought to go as a group. For JP Morgan and the others, the 10-week would be the target, be a continuation of the move to the downside. Take a look at KRE, kind of the same thing. Banks had a hard time of it yesterday because of that Moody's article that came out. And, when it comes to bank options, they're not that bad. I mean, they're not great. BABA had better options than KRE, but Bank of America is a really cheap company, right? $31, $32. The options in here aren't overly expensive. 57, 58. That's a 1 penny slippage. You wouldn't even have to really negotiate, right? And just buy it on market. It's not exactly ideal to, take the 1 penny slippage and not negotiate for price. But if it's the difference between, getting into your trade and missing the run, say on a breakout like that, knowing that you can just market order in and you're only slipping a penny, yeah, I like it. So with these banks, at least with Bank of America, $32, if we can continue the drive, it's not asking for too much. If they get love, we could see 33, but that would be asking for a bit, because we got the 50 period overhead, right? 50-week EMA. And this is a very narrow TRB. I mean, like really narrow, but it does fit. I don't really like it, but it does fit. On a daily, it's more of a TRB. You see how much work we have to do. Let's get the gap close first, which is that 31.42. And if we can get the gap closed, then we'll focus on, and that's not even the full gap, right? Like I've talked about before, if it closes here, then the gap isn't closed until we get back up there. So we closed there, we opened it here, fell down, had a nice recovery, but it still needs to get all the way back up to that level to have the gap closed. And this recovery looks really good, but that's not enough. Still got a long ways to go. I think it can get there. Let's see it play out. So that's what I got for you guys this morning. Hopefully it points you in the right direction. China ADRs, the EV market behind that, the financials, and keep your eye on the auctions today. They are going to make or break the rest of the day. I'll see y'all tomorrow.